Hello everybody, my name is Mark. Welcome to another investing video of mine, and in this video, just like clockwork, right here you can see I sold to open another 12 put options. These ones expire on November the 22nd, 2019. Today is November the 17th, 2019, so that's in about a week. And if we go to my transactions here, if you watched my last video, you know that I bought 6 put options, $12 strike price on steel, expiration of January 2022. Those were the leaps, and I'm very happy that they came out with the 2022s. Makes it much easier to make some money for me. And then I immediately sold to open 12 put options. So it's kind of a ratio spread, but not really, because I own 6 put options at the $10 strike price, and so there's only a $2. There is a little bit of a risk there, but only if it goes down to 10. If it goes lower, I don't lose any more money because I have those $10 puts. So that would have been on the 7th last week. And then here on the 13th, I sold to open another 12. That's when I sold to open those ones, and that's what I got going right now. And it is now the 17th, 4 days later. So these 12 puts have already expired, and so I made all the money there, $51.98, and that would have been on the 7th. And Friday was the what day was Friday? The 15th. So in 8 days. So basically, that would be a weekly profit of $50 a week, let's say. So if I somehow manage to make $50 a week in 1 year, there's 52 weeks in a year, so 50 times 50 would be, I'll make $2,500 in a year, plus 100, so $2,600, and that would be pretty good given that my investment is only $2,074 on those 6 puts. So these put spreads are really good. I favor them and I like them. And steel, as you can see right now, is trading at $13.08. And let me close this out here. And this right here was the earnings, and steel really went up, and then it started dropping a little bit, and then when it popped up like this, that's when I decided to get in a put spread. And I initially thought of just selling to open the puts, but being the person that I am, I like to hedge myself, and so I sold all those puts, but then I bought the puts, and so I'll still make money. And just like before, my worst case scenario, right now, I currently have these 12 put options, and if we go to my positions here, there they are right there. So that's what I got going right now. And just like before, my worst case scenario is if steel goes down below $12 a share, then I start to lose money on those 12. And even though I own these 6 puts at 12 and these 6 puts at 10, because there's a $2 gap, I could end up going down, like let's say it goes down to $11. I'd be down about $600. I could potentially go down about $1,200, but steel has to go below $12 a share by next Friday. I'm selling the weeklies, and I like selling the weeklies. And for my money, I think it's a pretty safe bet, because if we look at the support and resistance, you know, on this, and this again, this is earnings here, and so I'm basically just trading off of this little pattern in this little range right here. And my puts that I'm selling are all the way down here. Now, I would not have a problem selling 13s, let's say, but I would do less contracts. But I would rather do more contracts and sell the 12s and make the more sure thing than sell the 13s and have to deal with the little dips, and maybe I have to buy them back and or maybe even close out if steel actually did break down a little bit. I feel much more comfortable selling the 12s. And my trading plan is very simple. I am going to continue to sell to open these weekly $12 puts until the cows come home, unless steel actually does go below $12, in which case, depending upon how far below it goes, if it goes down a lot, like let's say it goes down to $11 a share next Friday, which I don't see that happening, but in this crazy world, anything could happen. But if it did go there, then I would just simply buy some more puts. And that's one of the reasons that I have a lot of cash on the sidelines. If we look at my cash balance here, I have $24,000 waiting in the wings to come to my rescue if steel does go that far, and then I'll just simply buy some more puts, and in which case I can just continue to roll out and maybe sell the monthlies, and then I'll have those 6 extra puts. So if steel is for some reason going on a downturn, I can actually make the money on those extra 6 puts that I'm planning to buy. But if steel goes below 12, but not that far below, let's say, and let me get rid of this. Let's say it only goes down a little bit, then probably what I'll do is I'll just buy to close those $12 puts, and then I will sell to close my 6 $12 puts, the leaps. And let me go back to my balances here. Or I'm sorry, go back to my positions here. And so here's my leaps. So I would buy to close all 12 of these. I would sell to close these and probably make a profit on the entire thing. I believe in the last video I looked up the delta, and the delta on these puts were standing at about $26 to $27. So I would make money on these $12 puts, the leaps. I'd sell to close them. I'd buy to close those, take a little bit of loss, and then I would just hang on to my original position, and I think I would be up overall in the spread, but I would probably be down in the shares. I do own the 200 shares, and that's another little trick that I'm doing for myself with my money, is that let's say if steel goes up a lot, if it goes up to $16, $17, I might have a hard time selling to open more puts. I mean, what strike price am I going to sell? If steel goes up to $17 a share, what strike price puts am I going to sell? 15s or 16s? Well, the answer is I don't care, because I have 200 shares and those are growing in value. So I think this is a very simple strategy that I've devised for myself. A guy like myself that doesn't want to sit here and worry about the market all day and become a 24/7 day trader. I just want to make some money, but I want to give myself a little bit of the advantage that you get with options, the leverage, and being able to buy and sell stock on premium. I think it's a great thing to do. And so again, my plan is very simple. If steel goes below 12, if it goes a lot below 12, then I'm going to buy more puts. If it goes a little below, then I'll just close out the whole thing and make a profit. If it stays in the same range here, then I'll just continue to sell those $12 puts until the cow comes home. And if it goes up, I'll be happy as you can imagine, because if it goes up, I own those 200 shares of steel right here. I own 200 shares, and even though I might be down in the put spread, I know I will be up a lot more in the shares. So I think it's a good plan that I've come up for myself, and it's based on my belief that I personally believe that steel is on its way back up, slowly but surely, and maybe it'll only pop up on the earnings. I don't know. But when I look at a long-term chart, and I see a curvy line there, and I see a curvy line there, and then I see another curvy line there, to me, that's an upswing waiting to happen. I don't care about the sharp moves. Sharp moves are very unpredictable. I mean, yeah, it went up a lot very quickly, but then it came right the freak back down, And so the sharp moves are much more unpredictable than the curves. So I like when I see these curves, and I see curves because to me those curves is over a period of several weeks, even several months, that the trend is changing, and that people are changing their mind about the stock. And if we look at these curves, you can see lots of major upswings. And so I see another curve here, and so in my mind I can see steel going way in the heck up here, and I would be so happy if it did that. And so that's why I decided to open this put spread. I originally thought I'm just going to sell the open puts, but I thought, well, maybe it's safer if I just do a put spread than just to straight out sell the open puts in case steel does go back down and does an about face. So that's my simple trading plan. If steel goes down, here somewhere, I buy more puts. If it goes down a little bit, maybe right below 12, then I'll just close out of that original put spread and make a little profit on that, and I'll probably be down in the red paper loss wise with my shares, and then I'll just wait for steel to make its move again, and before it finds a new range. If steel stays where it's at, then I'll just continue to sell to open those $12 puts. If it goes up, I don't know what I'm going to do other than make money. I mean, to me, that's the best thing that could possibly happen to me is for steel to go up, and that's what I'm banking on, and that's why I've got all this going on. So that's it for my video. I hope you enjoyed it. As always, if you want to leave a comment or a question, I'll answer it as much as I can. Thank you for watching. I will see you in the next video. Ciao.